Bitcoin right now, we're sitting at $20,242. We're about flat on the day. What I want to do is take a look here on the monthly time frame. We're going to work our way into the hourly time frame, get you guys some good detail. So if you get something from these videos, don't forget to like, subscribe, hit that notification bell. It's always appreciated. And let's dig into this. So guys, when we're looking at this here, this is going to be the monthly time frame. So each candle is going to represent a month. And what you can see, we had a beautiful bullish engulfing candle back here, and this was roughly in January. And the main thing that I've been watching now, we're trying to get a monthly trend change back to the upside. And when we look at this and we're looking at the retracement size of this move here, you can see that we've come back roughly to that 0.5. Anywhere from that 0.382 to that 0.5 sets us up for the possibility that this could be a higher low and we could make another move higher. But if we start retracing even deeper down to that 0.618 or that 0.786, that's more of a potential for a bounce back up to anywhere that 0.382 or maybe slightly higher to test the highs. So that's what's important when we're watching this. We're looking at that retracement size, because essentially, guys, this is what it looks like. If it's tight and it stays on the retracement right in this area, we have room to just go up and try to smash through this high here. But if we put this out here now and we look at our retracement, we come all the way down to the 0.786. Look how much more work we have to do to even try to get up to test that high. So that's why this is going to be so important for us, is watching this retracement size. And we don't have any confirmation that we have found our retracement bottom here. But when we're looking at this, that's what we're looking for. We're looking to see if we can set that monthly high or low so that the trend that therefore can change. Because right now we don't have the monthly trend at our back, or the wind at our back. We have not had a monthly MACD cross. You can see down in this range, and that's something I'm paying a lot of attention to. I really want that wind at my back here. You can see in the last bull market, we had it almost the entire time. So we really want to see that cross. We have that monthly wind at our back. If we get into the 1 week time frame, and guys, the reason why I keep pointing out these order blocks, they're very accurate. And you can see right up in this range, especially when you test it twice. So we tested it back in this range. We saw rejection with a big bearish engulfing candle. Right up in this range, we got back up to that area. We tested that 200-week moving average, which is going to be in white here, and we saw rejection off there as well. So now what we're looking to do is see if this area of roughly, we'd say support, we got orders coming in from 19,215 all the way down to about that 17,000. So now we want to see if this range, this area, can hold as support. But like we said, the tough thing is, guys, the best situation in my opinion, if we get back down into this range, so say we come down even farther here, we would push up. Best case, we're getting into an equilibrium and we're spending some time in an equilibrium, just because of how far we have retraced already. If we can continue down a little bit more, then our best case scenario is just most likely going to be getting in that equilibrium, just due to the size of the retracement. So it's always something that you do want to pay attention to, guys. So on the weekly, just really watching this resistance here. We've been rejected twice now, and this has been right around that $24,700 range. If we look at our MACD on the weekly time frame, still in the positive here. So it has been positive, and this has been since, let's see here, August 1st, and this is of 2022. So we have had this for quite a while, guys, and that's what you want to see. You want to see them aligned. You want that monthly, weekly, and daily all aligned and all in uptrend, so that you know the bull market's back on. Right now, we do not have a monthly MACD cross to the upside, and we don't have a monthly uptrend. In the weekly there, you can see that we do have this weekly MACD cross, and we've been holding it, and we did have a weekly uptrend, but now we're really starting to lose that here, guys. So we got to be careful in this range, is more so what I'm trying to tell people. I'm still being cautious and being patient in this area here. On the daily, we have now lost our 200-day moving average, and that's never a good thing after we've been trading up above it for quite a long time, because now, guys, we have to have all that buying force just to get back up and try to start having candle closes up above it. And that's going to be another, let's take a look here, roughly 8% just to go up and test that. So it's definitely a possibility, guys. We get a reaction bounce and we go up into these areas, but you can see sell blocks are starting to stack up now as we're in this daily downtrend. So we're looking at this area of support, 18,000 or so. Beyond that, we'd be looking down to about that 16,500. Then it'd be down to around that 15,800. And guys, one thing that I've been talking about for quite a long time is risk management. And I also do believe at some point we're going to come down and most likely test these lows again and try to see if the bottom's in. And that's going to be important, because if we get bullish candlestick patterns off 15,500 and it's on good volume, then we can most likely know that the bottom's going to be in. And many times what Bitcoin likes to do here, guys, is flush and then reverse. So you can see this whole area of support. When we flush down through this, you'll flush and then you just get bought back up and you go the opposite direction. So sometimes, say we have this 15,500, we get back in this range, you'll get a flush down through it real quick and then you rip up higher. And that's it. And then the bottom's in. And people know the bottom's in because it was bought up once you broke that support. So I'm looking at all these things right now, guys. On the daily time frame, though, we're looking at the MACD. We still do not have a bullish cross to the upside. We're at a negative 392 right now. So for me, nothing's telling me I have to jump into a position right now. You know, like we talked about, guys, if you're dollar cost averaging for the longer term, this is not a bad area. But for me, I'm still going to be patient. I'm going to be looking at some of these lower levels, especially with the pressure that's been getting put on the equity market like we've been looking at for a while now. So on the 4-hour time frame, as you can see right here, we're into one of these bullish order blocks. So we're seeing if we get a little bounce out of here, but still we got a lot of work to do. You can see our 200 moving average pressing down overhead, starting to curl overhead. And then you have all these sell orders up here. So even if we do get a nice reaction bounce, I would look for resistance or people to start shorting back at around $22,208. And then if we get into the 1-hour time frame here, trying to change the trend. On the 1-hour time frame here, we had our low, high, higher low, but still had a pretty big retracement here, guys. And this is what I'm talking about. When you have these big retracements, you try to get back up and take a look where the order block is. And most likely sell pressure should be coming in right around here on the hourly at about 20,738. Then obviously we have some buy orders here around like 19,000 would be some support for us, all the way down to 19,500. Then we got some more down here around 19,000. But when you're looking at these guys and we step back and we look at the daily, you can see that the bulls are giving a lot back right here. And the fact that we've dropped below this 200-day moving average, that's significant to me because it's going to take a lot of pressure to get back up through that. Right? We finally reclaimed the 200-day moving average, and now we've given it back up, and it came on heavier volume. So these are things I just want you to be careful of out there, guys. I'm going to continue to preach risk management. Let me know what y'all got going on today. I hope you have a wonderful day. God bless y'all, and take care. Be safe.